So when I go back to Bitcoin, the main question I look at, okay, what are the monetary dynamics of the network? So we see the very low inflation rate and the hard cap and all that. Then the next question is it the best at what it does? And will it continue to capture market share in its like industry or even adjacent markets? And I view yes. So as long as I see nothing on the horizon that I view as disruptive to that trajectory, then I expect both from the scarcity dynamics and then the fact that it's the leading, liquid, secure cryptocurrency, and then it's better than gold in many ways. It's better than the bond market in many ways. It's, as more people learn about it, the rational thing is for them, some subset of them, to want to buy it. That I generally view as yes, that's structurally bullish for Bitcoin. And the only time I might be more cautious on it is if it's, we get a crazy euphoric spike. You can look at different metrics like market value to cost basis or something. And then I say, well, okay, now I think it's going to go higher, but maybe it's going to take a 2-year break or something, right? So there are certain moments I could be more cautious, but as long as I think the structural things are in place, I'm bullish.
Lyn Alden, who is renowned for her in-depth research on financial markets and macroeconomics, emphasizes Bitcoin's special status as a decentralized, limited asset in a world where fiat money use is constantly growing. In contrast to conventional assets, which are subject to inflation or manipulation by central banks, Bitcoin has a fixed supply and a halving of its issuance rate over time. In addition to being a hedge against inflation, Bitcoin's inherent monetary policy makes it a potential store of value with asymmetric upside as its use increases. Lyn Alden stresses the need of comprehending Bitcoin's function in a changing financial landscape as global debt levels climb and monetary policies continue to be unpredictable. She examines at how institutional demand, liquidity cycles, and fiscal deficits are influencing Bitcoin's course and how it can perform better during uncertain economic times. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Yeah, I think, obviously there are multiple assets that can benefit. Bitcoin, I think we would generally agree is like the best way to do it because it, you get the absolute scarcity mixed with the fact that it's a young asset. If it was just looking at relative scarcity, we would say, okay, gold's growing by 1.5% a year, Bitcoin's growing at less than 1%, and long-term grows at 0. So should we expect Bitcoin to outperform gold by 1% a year? No, because we have a total adjustable market in mind for what Bitcoin could be, or at least a range. And we think that a $2 trillion market cap is so small relative to what it could reach. So in addition to merely protecting against debasement, which is kind of what gold's doing, it's actually growing into whatever it's going to become. So I think that's the bullish thesis. And one way I kind of look at any investment is through the lens of market share and dilution. So if you're a holder of the dollar network, there's different instruments to do it. You could hold a bank account that pays you 0, a bank account in a smaller bank that pays you maybe 3%. Could be holding T-bills, getting a little bit more. And you have to compare that to like the structural growth rate of the dollar supply, or all monetary aggregates. So dollars plus, say, treasuries, for example. You can map it in multiple ways. And you always ask, is my share of the network, if I just hold, so factoring out my new income, because we're just talking about investing or saving, what percentage of the network do I have now? And in 5 years, will I have like less of the network just by holding and collecting any sort of payments I might be owed versus not? And so if you hold dollars and the money supply grows 7% a year and you get paid 4% a year, you're going to end up with a smaller share of the dollar network over a given 5-year period. And same thing true as gold, except your debasement rate is something like 1.5% per year. But then you also have to ask, is the thing you're holding increasing its like market share compared to other things? So for example, someone could hold IBM stock and they're buying back shares. So you're holding a deflationary asset, which sounds good, but then IBM's getting its lunch eaten by all these other tech companies. And so the market share of relevant tech for any one IBM share is decreasing. So when I go back to Bitcoin, the main question I look at, okay, what are the monetary dynamics of the network? So we see the very low inflation rate and the hard cap and all that. Then the next question is it the best at what it does? And will it continue to capture market share in its like industry or even adjacent markets? And I view yes. So as long as I see nothing on the horizon that I view as disruptive to that trajectory, then I expect both from the scarcity dynamics and then the fact that it's the leading, liquid, secure cryptocurrency, and then it, it's better than gold in many ways. It's better than the bond market in many ways. It's, as more people learn about it, the rational thing is for them, some subset of them, to want to buy it. That I generally view as, yes, that's structurally bullish for Bitcoin. And the only time I might be more cautious on it is if it's, we get a crazy euphoric spike. You can look at different metrics like market value to cost basis or something. And then I say, well, okay, now I think it's going to go higher, but maybe it's going to take a 2-year break or something, right? So there are certain moments I could be more cautious, but as long as I think the structural things are in place, I'm bullish.
Lyn Alden emphasizes how Bitcoin acceptance occurs gradually before picking up speed. Even if a lot of businesses and organizations have been hesitant to adopt it, Bitcoin's legitimacy grows with every market cycle. Investors are starting to realize how resilient it is after seeing several bull runs, including those in 2017, 2020, 2021, and currently. Initially, Bitcoin was written off as a speculative bubble. However, skepticism has decreased after the industry sets new records and recovers from crashes time and time again. Now, more organizations are changing their minds because they see Bitcoin as a genuine store of value in addition to being a volatile asset. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
Yeah, I agree with all those points. I would make a couple other observations that in any given big company, there are Bitcoiners. Like at the vice president level, there's a lot of people like that in companies, and it kind of doesn't matter until they're majority, right? So like if you have like 9 board of directors and like 4 of them like Bitcoin, it doesn't really matter until you hit 5, unless the CEO or the one with disproportional voting rights is the one that gets it. So if it's Fidelity or MicroStrategy, you can be super early because it's top down, whereas bottom up inherently takes a long time, but then it's like gradually and then suddenly. And I still think it's going to be a minority of companies this cycle that do it out of the, of course, the thousands that exist. But they are popping up more frequently now. I think the accounting changes were a big deal. I think another thing is just seeing another cycle. So a point that I made before is that when someone sees like 3 cycles, not that there's been 3 cycles, but that they've seen 3 cycles, that actually matters. And for a lot of people, the first cycle they saw was 2017. And then, because most people have not actually looked at the logarithmic chart of Bitcoin, or they discount some of the earlier small cycles as irrelevant. But the 2017 cycle, the 2020/2021 cycle, and now the current cycle is kind of 3 cycles of higher highs and higher lows that are all in public, really, if you discount those earlier cycles. And there's only so many times you can kind of say, well, that's a bubble, and then it's dead. Oh, that's another bubble, but that's only because of COVID money printing. And then it's like, oh, wait, it's back again. Despite, high interest rates, you can only dismiss it so many times before you say, well, maybe I got to reassess. So I think that's another factor that's kind of mainstreaming it. And then I did a piece, I called it a new look at, what did I call it? A new look at corporate treasury strategy. And I analyzed kind of why this is relevant. And among assets that corporations can hold, there's kind of a hard cutoff, which is anything that you expect to underperform your equity, you can't really hold in scale. Like obviously you hold cash, even if it's going to underperform your equity because you need some cash. But you can't just like unlimited stockpile gold, because gold historically underperforms US equities, ironically, roughly by the dilution rate that it is estimated to have. And so you have to kind of cross the threshold of like, okay, what is like an asset that is, going to equal or exceed your own equity? That's not another company's security. And Bitcoin is kind of the only thing at scale that has a shot at that. So it's not an accident that's the asset of choice that these companies are turning to. It's the only thing big, liquid enough, not a security, and then actually has attributes that make it a good treasury asset, at least for part of your holdings. Obviously, the volatility precludes it being too big. If you're running, if you're trying to run a certain way, you have to have cash as well. But yeah, it's powerful.
According to Lyn Alden, there is a gradually then suddenly pattern to the adoption of Bitcoin in large corporations. Although there are now a lot of companies with high-ranking Bitcoin supporters, including vice presidents or board members, company-wide acceptance is still delayed until they reach a majority. But once a tipping point is reached, the change can occur quickly, as seen by companies like Fidelity and MicroStrategy, where early adoption is greatly influenced by leadership. She also emphasizes how Bitcoin's credibility grows with each cycle. When Bitcoin initially caught the attention of many institutions institutional investors in 2017, it recovered and continued to expand in 2020 to 2021, and it is currently in the current cycle. It gets harder to write off Bitcoin as a bubble after 3 separate cycles of higher highs and higher lows. Alden goes on to explain why businesses are using Bitcoin to hold their treasury. Businesses require assets that can perform as well as or better than their equity returns. Gold and other traditional safe haven investments usually perform worse than U.S. stocks, which makes them less appealing for large-scale holdings. The distinctive features of Bitcoin, however, are its liquidity, lack of security, and potential for appreciation over time, which makes it an alluring treasury asset for companies trying to protect themselves against inflation and currency depreciation. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.